Good evening, traders. Welcome to the Missed Trade Sunday evening report. Hey, I hope you guys had a great weekend. A lot of things happening in the markets. Obviously, last week we had a shellacking of the markets. We took a 140-point range last week, which is the largest range we've seen since, I believe it was October of 08 when the old flash crash happened. And yes, even though the VIX wasn't as high as it was during that period of time, we definitely saw some volatility. Now, of course, we got some news after the market closed on Friday, which was the debt downgrade of the United States debt, which has led to a 30-point gap down in the Globex session tonight. That's Sunday. And we have rallied a little bit off the double bottom, but let's take take a look at a few levels for this coming week and also what is coming up. First of all, we don't have any news on Monday, but we do have FOMC on Tuesday at 12:15 Eastern Standard Time. So be sure to have that marked on your calendar. But Monday we don't have any news. I am still suspecting some volatility into Monday because of the news. It will probably open volatile because there'll be a lot of orders coming in and going out. So be very, very careful on the open on Monday morning. Otherwise, let's take a look at this in a larger context. On a weekly chart, we have our lows back in July of last year to our highs up of most recently in April. And really, guys, we're right in this 50% retracement on a weekly chart, stuck in between the 61% and the 50% retracement. Can this still go down from here? Absolutely, it can. We are tremendously oversold at this point, but the 143 level is a possibility if we find some more weakness early. Now, something to remember, the difference between bull and bear markets are when the patterns that happen in these markets. For example, on bear markets, they tend to rally in the morning and sell off in the latter part of the day, and vice versa for the bull markets. What we always used to see in this run from back down here in August all the way up to this most recent high, we used to see a quick sell-off in the morning. It would find legs and continue to grind all day long. And I would suspect to see the same types of patterns here. So be very, very aware of that and be very careful when trading it. If we do decide to slip below the 1143 level, we have a zone down here to watch, which is about the 26 level down to the 18 level. That's an area that we could catch some support on and take a little bounce. Everybody, should I say, is looking for a bounce in this market. This is like a rubber band. It keeps on getting stretched longer and longer. Let's go take a daily chart here. Take a look here. 50% retracement from the top to the bottom here. We do have an area that I'm very interested in, the 52 area, the 1252 up to the 1257 level. This 1252 area, and I say area because depending on your aggressiveness, you could have gotten short in there, and that was the actual shoulder of that large monster head and shoulders pattern that we saw on this weekly chart right here. So when the markets do come back up to them there, and I suspect they will, we will probably see some serious resistance there. Now, if the bears want to take over and keep putting the pressure on the downside, this is exactly where they're going to do it at. And then if we do get above this 1300 level, let's say the bulls push it up and get above, and we trade above this 1300 level, this is the line in the sand. If we get above this, we have a great shot of making new highs on the year and then running this thing up higher. But right now, the sentiment is short. There's a lot of pressure down there. Bad news on the market, unfortunately. There's some things coming out of Europe that still are has the market a little shaky. Also, watch the FOMC on Tuesday. There's a lot of things that could be happening out of there. There's been some rumors, and I don't like rumors. You never trade rumors. Be very, very careful with rumors. They're like stock tips. Okay, you look at your price, look at your volume, look at your patterns. That'll tell you more than any type of rumor that there is out on CNBC or any of these other news channels. They like to invoke fear in the people, so be very, very careful out there. Otherwise, on a shorter time frame, guys, look for the gap tomorrow at 1197.75. That's the settlement. That's a very high possibility. And then, of course, the weekly pivot at the 1122 area there. So for Monday, sit on the sidelines for the first 30 minutes. Let this thing shake out and get a direction. Don't try to guess anything, and don't try to be a hero. There's going to be plenty of trades out there. Otherwise, take care. Have a great Monday, and we will talk to you tomorrow.